We're going to talk about mortgage rates at a 23-year high. Yes, we are also going to announce the one and only ORET Bootcamp, that 10-day event I've been playing with. We are officially launching it today. More on that later. And then, of course, I want to highlight something I heard from Alex Hormozi and Chris Williams during their 3-hour discussion I listened to yesterday. Folks, let's get started. This is Tuesday, August 22nd. We got a lot to cover. Let's start with existing home sales. Existing home sales reported today, right, the 22nd of August, are for July. Now, July means the contracts were probably June or late May. This was not the ugly number I have been calling. In fact, the ugly number I'm calling will now occur, I have the date, I looked it up, September 21st of next month. So roughly 1 month from today. And again, that is the number that is going to break the 4 million transaction level. And frankly, might be 3.8, 3.85. It is going to be ugly. The question will be price. Remember my theory about price. The lumberjack and I have a friendly wager of $1 on the following thesis. My thesis has always been, if you draw a line in any market across the country called median price, what we are seeing in most, if not all markets, is below the median is hot. And the farther away you get from the median, the hotter it gets. So, in my world, that is going to raise the price in the low end. And what will happen at the high end is we are going to find out who is truly motivated. We are going to see some massive discounts or reductions or whatever you want to call them. And we are going to see a lot of withdrawals saying, whoops, I missed the market, I am taking it off. So I expect a couple of things next month. One, transactions to break the 4 million level and go lower. Note, we called this at the beginning of August. Now more and more people are catching up. Two, prices are going to be frustratingly stable. I've been calling that for well over a year. And then finally, days on market are going to explode higher. Days on market, when this is all said and done, will likely double. I'm talking days on market of 40 days. So a lot of this is coming. So again, pay attention, buckle up. But as always, these are facts. In fact, Lance Lambert put out a great article that I shared on Twitter today about affordability and all this stuff going on. It is all factually correct. But what is missing in that, in my opinion, and this is not for Lance to do, this is just for me, right? I need to remind you, I am team buyer. I'm a team investor. What we are trying to do is get great deals. And I promise you, as more and more of you are finding out, you get great discounts from motivated sellers who just want out. More and more of you are writing offers 20, 25, even 30% below list price and getting counters and having discussions. Don't forget to follow up, follow up, follow up. This is our time. The cost of capital means nothing or very little to us. All we have to do is put it in our formulas and realize we can't pay list price. We have to pay something less. We only accept day one cash flow. Do the work. And we're going to talk a lot about that in the boot camp, which will come up later. So let's talk about existing home sales because I think they will surprise most of you, but did not surprise me. Existing home sales for July, down 2.2% to 4.07 million. The current cycle low, just so you remember, is 4.02 million. So we're up 50,000 from the low. We are going lower next month. Year on year, we're down 16.6%. Meaningful, right? If you are in the transaction business and you haven't yet become a hybrid agent, it's hurting. I understand. Now, guess what happened to price? Remember all those housing bears and crash bros and doomers? They don't understand how the median price is calculated. Folks, even with 7% interest rates, really it was 6.5%. These are July transactions. Median price went up 1.9%. So Pretty wild. Went up to 406,700. But again, this is all theater. The July numbers mean very, very little. Very, very little. It is all about the August numbers, which you and I will be talking about on September 21st, because I expect them to be terrible on transactions. Price, as always, frustratingly stable. Again, remember yesterday we talked about price elasticity and inelasticity. It's about the payment. It's about transactions, not about price. So go ahead and watch that video from yesterday. Mortgage rates hit a high not seen since 2000. Yesterday, Mortgage News Daily, I think it is, reported 7.48. Let's round that up to 7.5. 7.5 for best credit, 20% down owner-occ means most of us, myself included, we're paying in the eights. The eights, the eights, the eights. This is where stuff slows down. This is where people that do the work get excited, because it's going to get increasingly easy to find motivated sellers. It is going to get increasingly easy to find sellers who will play with terms, right? Maybe they'll take a second, maybe they'll take a first, who knows? Start to write disrespectful offers, follow up. Don't break rule number 1, must cash flow day 1 with existing debt structure. Don't bet on appreciation, don't bet on rent bumps. We don't do anything risky here. Cash flow day 1, write the offers, follow up. If they say no, move on to the next one. It's that simple, folks. What have you and I wanted for 3 years? We have wanted a slower market. What have you and I wanted for 3 years? Motivated sellers. Here's the truth. Motivated sellers always exist. They just hide in a hot market. No hiding now. You got mortgage rates at 7.5, 8, 8.5%. There is no hiding. If you have to sell, you are taking a discount. And if you follow what you and I talk about, you might be taking a hefty discount, because we have to cash flow. No gambling. So let's talk about something called the reservation wage, which I have never heard of before. We'll talk about American Airlines and some strikes. So reservation wage, where does this come from? This comes from the New York Federal Reserve Employment Survey. Yes, I read geeky stuff like that. The New York Federal Reserve Employment Survey highlights something that I have been trying to bring for you over a year. Remember my theory. The bottom half of the income scale is going to see a disproportionate rise in wages. We are going to see real wage growth, not just nominal wage growth. This is going to be great news for the employees who haven't gotten their fair share since the 1970s. The CEOs, the executives, the stockholders who have benefited since the 80s, sorry folks, your time is over. It's about getting the wages to the employees. So the New York Federal Reserve Employment Survey says a couple of things. One, the average, this is again from the New York Fed, you can look it up. The average full-time pay today, $69,475. Let's call it 70 grand between friends. That is the average, not the median, the average. If you don't know what that is, look it up. That is up 14% since last year. Folks, this is exactly what I'm talking about. We as a country are running around with fixed rate debt like we've never seen before. Roughly 88% of our debt is fixed. Only 12% is variable. That is really, 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 really good. And now we are seeing wage growth of 14%. Again, on the average, if you want to look it up again one more time, the New York Federal Reserve Employment Survey. I read it yesterday. It might have come out over the weekend, but I read it yesterday. Now, what is a reservation wage? I had never heard of that before. Basically, according to the New York Fed, a reservation wage is what is required for you to change jobs. Right? In order for you to change jobs, what do you need? According to the New York Fed, you need $78,645. Folks, we have a structural problem in our employment base. And what we are seeing is wages both on a nominal and real term, are going up. This is what we've been talking about for a year. This is the hard part of inflation. And again, if you're getting an 8 or 14% bump and most of your expenses are fixed, over time, we will roll into a better affordability level. And again, $78,645, that is up 8% from last year. Lastly, on this topic, again, from the New York Fed, it highlighted the Atlanta Fed tracker saying that wages are up 6%. That is nominal. If you adjust for inflation, you could take off, what, 3%? So it's up 3% year on year. And if you switch jobs, you get a little bit more love. You're up 7%. So again, wages, wages, wages. That's what we're talking about. American Airlines. American Airlines follows United, follows UPS in getting their union workers a significant pay bump. This time was for American Airline pilots. American Airline pilots got a 21% bump in pay. I don't know if you've been tracking the news around strikes this year, the summer of strikes, but here are some data comparing this year to 2021. We have had 230 strikes or strike threats this year, potentially impacting 320,000 union workers. This is why you saw UPS and you'll see others get significant wage bumps. In 2021, we saw 116 strikes, but it only impacted 27,000 union workers. So what we're seeing this year is more strikes and larger folks. And don't forget, we have a doozy on the horizon. United Auto Workers Union, UAW, 150,000 members strong, are threatening to strike sometime early to mid-September, which will impact GM and Ford and many, many others. Folks, this is what I've been talking about for a year. Again, the employee is going to get theirs. This is 1970s. It's not the 80s. It's not, hey, let's get the shareholders more profit. Let's get the executives their private jets. This is, we got to pay our employees or they don't show up. So again, you're going to see wages go up again disproportionately for the bottom 50% of wage earners, in my opinion. So big news. So yesterday, Alex Hormozi and Chris Williams, there's a 3-hour podcast. I am fair about halfway through it, but they said something in the first 10 minutes that I had to go back and re-listen to. I don't do that very often. I had to listen to it again. So basically, Alex and Chris were talking about, hey, if you don't want to be like most people, don't do what most people do, because most people are overweight, divorced, and only have $1,000 or less in the bank. Think about that. That was just a mental thing for me to play with. How many of us are just doing what everybody's doing? If you are doing what everybody is doing, why would your results be any different? I hope that most of the people at One Rental at a Time, especially if you come back every day, you are not like most people. You have a daily discipline. You have a focus. You believe in doing the work. You believe in getting 1% better every day. But I am sure you see people around you, maybe in your network, who are squawking and making big noise about life-changing this and life-changing that and not doing anything different. If you're not doing anything different than everybody else, why would you not be overweight, divorced, and not have any money? That got me thinking. Shout out Chris Williams and Alex Hormozi for putting that little mental twist out there. Oh, this one's bad. This is bad. We called it. It's going to get worse. I don't know what to tell you. The operating environment for banks sucks, and it's going to suck for the next 2 years. We are going to see consolidation. We brought you to this months ago. Just happened again. This time S&P downgraded banks. They downgraded many banks, and again, folks, I don't know what to tell you. More are coming. It is a tough operating environment. Well, thank you very much, S&P. We are downgrading banks because of funding risk, weakness in profitability, deposit flight, higher rates, and liquidity risk. Sounds about right to me. That is what is going on in our small and medium banks. It is not good. It is going to be a rough couple of years as we go through this. And I do think the outcome of this is 20-25% less banks. That's kind of how this is going to go. The big banks are fine. Everybody else struggling. All right, let's talk about the boot camp. But before we do that, let's remind you, you have one more day, 24 hours or so, to watch 2 free videos. I gave you 2 free videos worth $100. I think they're worth $1,000, but if you were to buy them, they're $100. I put them on my new channel called the Daily Financial News. One of them is a 4-hour video with 4 amazing ladies. And let me just tell you this, fellas, if you're not watching that video because it's 4 females, you are missing out. Those 4 ladies did amazing things, came from very humble beginnings, and make us look like we're not trying. April Crosley, Anna Kelly, Casey from Brick by Brick, and Alicia Merriman. The stories are great. The execution is great. Their success is great. I fear, just my fear, given my channel is about 80% men, at least based on the stats, that guys, you are not appreciating the value that those ladies gave. Shame on you. Go watch it. And then second, a lot of you like the Avengers, at least the ORAT Avengers, Millennial Mike, Dion, Matt, and myself. I gave you that as well. 7 hours of content. Why is 7 hours of content important to me? I need 1,300 hours to get monetized on my new channel. The new channel needs 1,300 hours, which means I need 200 of you, 200, to watch the 7 hours, and we're done. We got there. So if you can hit play and watch it, maybe watch in the background, whatever you need to do. But again, that would be very, very helpful. So now, the boot camp. I'm launching the boot camp today. We are going to do it. I have heard from 30, 35 people, maybe even 40 by now, saying, I want to do it. Let's talk about who the boot camp is for. The boot camp is really for a couple of people. One, if you are feeling stuck, I think this is a great opportunity for you to get in, discuss why you're stuck, have some open dialogue, and hopefully get you unstuck. 2, if you are new to real estate investing, you don't have a buy box, you don't have a market, right? We are going to start very, very early. If you are already executing your buy box, which is a core tenet of this course, you may not need this. In fact, you probably don't. But this is for the folks that are early. Second or third, this is not free. I've been very clear all along. If you have not bought my main course, it's $1,000. It's $997. I'll put a link below. If you are a member of my course, How to Get Started One Rental at a Time, we will just true up the cost so everybody's whole. I would never ask you to pay twice. Now, what are you going to get if you sign up for this? 1, the day you sign up, I will give you everything I've created. How to Get Started One Rental at a Time, Get Your Money Right, Mastermind, Buy Box Deep Dive, everything I have, I will unlock for you the day you sign up. Second, I am going to send you an email with 5 questions. These are the 5 questions because when I'm doing this boot camp, the one time only, I want to know everybody there. So I'm going to ask you to answer 5 questions. 1, I'm going to ask you, tell me about yourself and where you are in your journey. Feel free to write whatever you want. I will read everything. 2, what are the 3 things you are looking to unlock in our 10-week journey together? 3, do you have a market in mind or a buy box in mind or nothing yet? Just where are you in the journey? 4, what is your biggest struggle or stumbling block? And then finally, I'm thinking about doing our 10 days during the week in the evening or sometime on the weekends. So I'm going to ask you, are there any times Monday through Friday in the evenings that do not work or on the weekends that do not work? There is no chance that I can put a schedule together that will make everyone happy, so we will alternate, but I'm going to do my best. And I want to actually thank Richard. Richard actually bought it yesterday already. So Richard, you bought it. You're in the course. Congratulations. So again, answer these 5 questions. And another thing, I love exceeding expectations. We are going to hold a day 0 event. So this day is not included in the 10. So I guess we're going to do 11. I want to have a call probably on September 5th or September 6th. Hopefully what happens in the next 2 weeks is everybody signs up, everybody answers the question, and then we're going to get together in the evening on September 5th or September 6th for about an hour. We're going to meet each other, we're going to talk about what I read, and we are going to set the expectations going forward. So I am not taking this event lightly. If I'm going to do this one time, I'm going to do it right. So again, if you want to get in, you can buy the course. I'll put a link below. It's actually on my website right now. It's $997. If you are already one of my students, reach out to me directly, either on my website, via email, text if you have that, and we will work out the exchange and do PayPal or something to get you in the course. So we are going to do it. It's available now. One time only, 50 people. Remember, I'm going to send you 5 questions, and we're going to do a day 0 event the evening of the September 5th or the evening of September 6th. I'm excited. I hope you are. Well over 35 people have said, I want to be a part of this. So let's see. Let's see you sign up. Let's get started. Again, if you are one of my students already, reach out to me directly and we will work out an exchange and I will just turn everything on manually. So I'm excited. I'm excited. This one-time event really should help people. And again, let me just say this. If you are thinking about buying this $1,000 event and that's all you have is $1,000, do not buy it. Do not buy it. I put out a lot of free stuff. You know what? I'll do this for you. Let's do this because I love giving back. If you are struggling to get started, I don't know if I should do this. What the hell? I already started, so I guess I'm doing it. What is today? The 22nd. If you are struggling and you want to take some positive momentum, but you just don't have any money, but you want to get going, reach out to me somehow, usually on my website. Tell me what's going on, and I will give you for free my deep dive buy box video, $47. It's at least something that you could do to take positive steps forward. Now again, folks, most of you are not in that situation. If you have the money and you could spend $50 and not feel it, come on. But there are some of you watching this that have this deep desire and you just don't have it. If I can give you something for $50 that makes you feel like you're moving forward, I want to do that. So hopefully you don't take advantage of me. But if you need it, I want to give it. So hopefully that makes sense to everyone. So again, I'm excited for the boot camp. This will be the one in time only. Again, you could buy it right now. I'll put a link below. I would sign up in the next 3 or 4 days so we get the roster of 50 folks. Again, remember you'll get 5 questions and we will have a day 0 event the evening of September 5th or September 6th. So let's get started. Let's have some fun. Bye-bye.